All right, today we are here with Bruce Frazier. Bruce is an industry-leading Wyckofian. He began teaching graduate level courses at Golden Gate University in 1987. Working closely with the late Dr. Henry Hank Pruden, he developed curriculum and taught many courses at GGU's Technical Market Analysis Graduate Certificate Program. That's a mouthful, including technical analysis of securities, strategy and implementation, business cycle analysis, and the Wyckoff method. For nearly 3 decades, he co-taught Wyckoff method courses with Dr. Pruden and has also used this approach to the markets as the foundation of his own trading for over 35 years. Bruce publishes a widely read blog at stockcharts.com entitled Wyckoff Power Charting and co-hosts a popular online weekly Wyckoff market discussion with fellow Wyckoff expert Roman Bogomazov. And also wyckoffanalytics.com is the website. That's where you can find Roman and Bruce. And I did an interview with Roman a couple of weeks ago. People really loved it. And I am very excited to have Bruce here with us today as a wealth of knowledge, a world of experience. Bruce, welcome.
Wow, so great to be here. Yeah, and I always love talking about Wyckoff. I've been doing it for, I guess, close to, well, over 40 years now, and I never get tired of it. So I'm thrilled. And then, of course, when you have new markets like Bitcoin that challenge us, it's great to see the Wyckoff method work with them. So let's do it.
Let's do it. Let's dig in.
Yeah. So I've got a whole bunch of slides here, and I'm going to jump around and go wherever it appears our conversation takes us. And so where would you like to start?
Whatever you have prepared is good with me. I think maybe taking a look. The big discussion out there right now is where are we with the Wyckoff method? We've had that distributive top, the broad distributive top. We've come down the mountain a little bit, and we're in this sideways range that people are wondering, is this accumulation looking for a spring, or is this distribution looking for another leg down? So maybe we could take a look at that and see what you're seeing from the Wyckoff perspective.
So here, this is kind of an important concept or an important idea, and that is that we get the concept of accumulation here, and this is a cause building process which leads to a markup. And so then we get a markup phase. We count this area with point figure, and then after a period of time, after a bull market, we get distribution. And so this actually is sort of a stock market model, which also encompasses the business cycle. But interestingly, Bitcoin follows this basic approach just as stocks do, commodities, and so on. And so now what we're going to do, and again, we'll just jump around some more, but we want to know whether or not there has been some kind of a cause built for an important markup or markdown in these markets. So I'm going to look at this. This is an accumulation schematic. There are a couple of different schematics, but the key thing to keep in mind here with accumulation or distribution schematics, et cetera, is that we're not so much looking for patterns as we are looking for characteristics of price and volume relationships as we go through phases A through E. And so in these different phases as we go, the way prices trade and volume trades will change. And with that, we can identify where we are, even though the look may be different from phase to phase to phase. And so this is the part that is the mastery concept in Wyckoff, but it's also where, it takes a lot of practice. So here are the distribution schematics, which we might be working with today. So you can see here the idea of distribution forming, and here's the phase work as we go along. Now, this looks like accumulation, but flipped upside down. But in fact, there are key differences in the way what's going on in each of these phases with price and volume. So this is what we're going to explore today as we look at Bitcoin. Is we're going to be looking at the see if we can identify the phase analysis. So let's go over here, and you can see here this is Bitcoin, but this is Bitcoin through May 13th. And so you can see that there's a beautiful upward stride. There's a very specific way that Wyckoff draws trend channels. So typically find two adjacent lows, attach these lows with a trend line, and then draw a parallel between the intervening high. So you can see here there's an attempt by Bitcoin to throw over the top of the channel. Not uncommon, happens all the time. This is what we would refer to as an overbought condition. Now, what will happen is there's no reason why an overbought condition can't result in a reaccumulation that can lead to even higher prices. But in this case, what we're starting to see is we're starting to see the evidence of potential distribution. And so one of the things I would point out here is that you can see, Greg, this volume start to expand over here as prices are turning off of what we call an upthrust. And so each of these upthrusting actions above the prior peak, this one here goes quite a bit higher, but notice the quality of this advance into this high, which is overbought, comes back to the top of the channel, goes up again, and this is an upthrusting action. This is an upthrusting action here, much less of an upthrust. This is diminishing momentum. And then we have another upthrust here, which is even less so than the prior two. And so this is a measure of exhaustion. And then notice how on the break off of this minimal upthrusting action, volume expands. So that is a classic attribute of distribution. And so when we see this happening, this becomes a warning to us because we're getting minimal upward movement, a loss of momentum, and we're getting much easier movement to the downside, wider spread with volume. And now you can see the last action on this chart here on May 13th is a break back into the channel. All of this looks like trouble. And so, and Greg, just jump in and interrupt me as we go here if you have comments or questions as we go. Now here, let's put some labeling on this May 13th chart. So we have what we call preliminary supply, which is the initial overbought condition. Then we have a buying climax. You can see that there's a lot of volume into the peak of the preliminary supply and into the peak of the buying climax. And notice here at the point of highest prices, there's actually a diminishment of volume. This shows that there's really less demand, diminishing demand as prices push up to these diminishing thrusts. And then look at here, look at this rally attempt here from this, what we call an automatic reaction to this upthrusting action. We can see here that the volume is generally drying up throughout. This shows that demand is really diminishing. And this is a sign that we're going to go into either reaccumulation for another move up or distribution. One of the tip-offs that there could be trouble coming is what we looked at earlier, which is this volume expanding as it breaks back into the uptrending channel here. And this, we're calling this a last point of supply here. And you can see a lot of volume come in, very big ranging downward bar back down towards support. So, and here is a point and figure chart. at the same point in time. I'd like to just point out here, this is a reaccumulation. And this reaccumulation, which is at around the count line is at 33,000 area. Well, notice how beautifully this counts. This is a 3-box reversal, 1,000-point scaling, and it counts up to 62,000 to 66,000. You can see that we struck 64 right into the middle of the objective price range. So great job by the point and figure work, giving us some idea using horizontal point and figure counting about what the potential for that rally was. We hit it on that final upthrusting action here and then turned off of that. Now we have this count potentially. Now I count distribution very conservatively, and for a number of reasons that I go into in my point and figure workshops. And you can see those, you can find those on YouTube at Wyckoff Analytics or at stockcharts.com. But here you can see, just taking this count from the last point of supply to the upthrust, which is right here, and you count that, look at the count we get. 31,000 to 26,000 is our objective range. Now, this is just counting from here to here. This little count here goes 43,000 to 40. We did go down to that level and pause. You don't really see it too much on the point and figure chart, but there was an attempt to pause in this range, and then it just kept going. So one last thing I would like to show you here is, you can see in this distribution schematic, you can see where I have identified these essential points in the distribution schematic and where I think they are on Bitcoin through May 13th. Greg, your thoughts?
Yeah, so the real question is your last point of supply in, the end of May. We're fast forwarded here almost a month now. So I'm wondering, if you don't have a current chart pulled up, I could pull one up real quick and take a look at it. Do you have an active chart like TradingView or something you can pull up real quick and we can take a look at it?
Well, here's
Okay, there you
the
go.
May 13th chart on the left. And then here is the chart that we basically just looked at. The yellow shaded area represents the point and figure count that we
Okay.
just talked about. And then I marked in where that was. And you can see that this 31,000 to 26,000 level has a couple of important aspects to it. One is, look at how quickly, once the channel, Bitcoin returned into the channel, look at how quickly it was able to go right to the bottom of the channel. So there, and also a tremendous amount of volume, higher than anything we've seen on this chart up to this point. Now, this comes in on the low day, provides support. This may be a selling climax and a cause building process for another move up. The other possibility is that this is a redistribution that is not yet complete, that could lead to lower prices. This area that I've shaded represents how much potential there is for Bitcoin in a distribution count. Now, one of the reasons I'm very careful about counting distribution is because we can get counts that are just too large. And so a count all the way down to over to here, which we looked at this point, this count here, I think it is, counts so far down that it puts Bitcoin into, I don't recall exactly, but it could be below 10,000. So it's a very low number. And so we have to be careful about that, because stocks will do that too. They'll build really big counts, and you just want to really be careful about how much count you take. So I count from the last point of supply to the high, the logic there being that from the point of the high downward is where we know that there's distribution by large informed interests. We can see the volume coming in, we can see the ease of movement. This is where they get busy and they're literally selling on a scale down off of the final peak for Bitcoin, at least so far. And so here we have the potential, and if we get a rally, say up to this area that stalls out, then I will be looking to take some redistribution counts to see whether or not there's the potential to go lower. So that is one of the main things that I'm looking for. Now, we had talked about, so let's go into this and talk in terms of the idea of a spring. So it's possible that we may be looking at a spring type scenario here where we have just gone down below the level of the selling climax. And then there is a cause building process. This looks an awful lot like what we're just seeing in that Bitcoin chart, and we'll go back to it in a minute. But what we want to see happen is we want to see a series of successful tests. Here's a test here, here's a test here, and then ease of movement upward towards, back towards the resistance area. And so this would really be, I think, positive for Bitcoin, is to see this ease of movement as it changes its character. You can see that these rallies that preceded are halting, and they are corrected back down to the support areas. This rally here, the reactions tend to be shallower, the rally's stronger, and it is able to generally break through the resistance area before it pauses and consolidates before it starts its new uptrend. And so that would be the thing that we would look for. Now, from the perspective of, let's see, from the perspective of this chart here, let's go in and blow it up. You can
There we
see,
go.
yeah, so you can see here, this is a substantial tail on this bar, huge ranging bar, substantial tail. It goes up now at this point, right in here is where our resistance is, but around 42,000. The support is going to come in right at 30,000 below the low of this climactic bar here. So 30,000 is going to be the support area. And notice how you have the spring that goes through the support area. It rallies, pulls back to a test, and then starts to turn up. Now, for the way that Wyckoffans generally think about positioning for the bull case, or any case for that matter, is that they might start initiating tranches of buying activity at the different points in the uptrend off of, in this case, the spring low. So the spring, the test of the spring is an excellent place to initiate a position. It would be a tranche, so it might be say 1/3 or 1/5 of your full position size on the test of the spring, if you're inclined to be a bull. And so here, this gives you
Are you
a
with me? I
good,
think I lost your audio.
okay, let's see. Test, test. Test, test, can you hear me?
There we go. Yeah, I lost audio I couldn't hear you for a second. I'm sorry.
Okay, no problem. Glad to know. Good to know.
Yeah, maybe the recording caught it. I don't know, but I couldn't hear it for a second there.
Yeah, that's okay. So, so here, we can see this low along here. So here's our spring, here's the rally up and the test.
Mm-hmm.
So we think in terms of tranches. And so somebody who's inclined to be a bull on Bitcoin here would look at this as being a low risk entry place for 1/3 of a position or 1/5 of a position, however you like to think about it, and initiate a trade on the test with a stop that's below the low of the spring action. Now you would look for confirmation. And so the confirmation would be to rally upward to the resistance area. And then there are what we call backing up actions or along the way. And the backing up actions along the way would also be places that we could potentially put a trade on. And so this would be the way to look at it. And then every time you add a position, you would typically raise your stop so that you would say, let's say you got stopped out on 2 tranches. Well, one tranche might be at break even or a slight gain. The second tranche would probably be at a loss, but that would start to minimize your risk exposure as you're averaging up a winning trade. Now, if this turns out to be redistribution, a couple of things could happen. On the rally phase, you might see that there is a real slowing of momentum and diminishing volume as price tries to rally up off of this area. And that may actually cause the trader to reduce exposure or close the position out and wait for more evidence of there being accumulation. Or it could be that Bitcoin just blows right through the resistance area here. You have 1 or 2 good positions on, and then you get a backup from above the resistance area back to it. We call that a backup. That's a good place to also put on a trade. So that could be a tranche, or it could be an initiation of the original initial trade. So there's different ways that Wyckofians will trade these things, but we look for the characteristics of price and volume to confirm our the scenario that we've created for ourselves. And so far, this looks to me like it's attempting to successfully spring and test this accumulation area. And there's any number of things that can happen from here. We don't know for sure, but a really good rally with good bullish bars upward and then through the resistance area with, really good action, price action would be, really bullish for Bitcoin. You can see over here on the left side here in January, that there is an attempt to spring the low here to here, and then a rally attempt, and then a test of the spring, a good bullish bar here, and then an attempt to go up. It comes back, remains positive, but loses most of its gain. And then look at how it just starts to just march right up to the area of resistance, and then has a very bullish bar where it blows right through the resistance area where it backs up and pauses. Very shallow. This is good at price action and leads to higher prices from there. So something akin to this would be very good for the bulls to see over here with Bitcoin.
What are the best time frames to look at the Wyckoff method?
Wyckoff is very fractal. So you could see in the case of Wyckoff that you could have, I actually have some examples of intraday charts that I've done. If you go to my power charting episode this week, I have a special guest, Alessio Rutigliano, who is a crypto expert, and he does some point and figure work intraday and does some very interesting point and figure charts. But also I show some point and figure charts on the market where I'm doing 30-minute data on point and figure. I might do 15-minute data on vertical price charts. So I like the longer time frames, but also this works quite well intraday also. And so I really like both.
So
And
that's price action, but for confirmation, you need a close, correct?
yes, ideally you'd want to see a close that closes where you're able to hold the majority of the gain, hold above key resistance, and then have very shallow and narrow reactions where volume diminishes on the reaction and expands on the in the direction of the primary trend. And so
Okay.
absolutely that's what you want to see with Wyckoff.
So to confirm the theory that we're in accumulation for a spring, then we need volume on the up move and we need to close above that resistance level right now, which is 35-ish right now. We're in that 35, 36. We need to close above 36 and a half, I think, to
Well,
break current resistance. And
yes.
then we continue to see, we could even wick up to 37, 38. We get a little back test, but we need to close above that and then continue to crawl our way up from there, closing with higher highs and higher lows.
Notice over here in this area, notice how the bars, the bullish bars are bigger than the bearish bars. And also they tend to generally expand here, here, here. As we get close to the resistance area, the bars compress. You can see supply coming in, but what we call that is we call it absorption. And so the ability of the bulls to be able to absorb shares around the area of resistance without creating a big reaction down in prices is very, very bullish, because ultimately to be able to absorb shares shows on the chart that strong hands are in control. And so this is what Wyckoff is all about, is being able to demonstrate that the very large informed interests have been able to absorb the majority of the floating supply. And that is what causes uptrends. It's the ability to be able to put the majority of the float into strong hands. And because strong hands won't sell until the uptrend is nearly complete or is complete. And that is what we see up here, as we see in distribution that this is the area where what we call the composite operator is willing to let their Bitcoin go. They're willing to sell it at this level. And look at how long they're able to hold up the price of Bitcoin while they're distributing shares. You have to have a really keen eye to be able to see that there is supply coming in and it's starting to take control of the market. On this decline here, volume coming in, bigger ranges in the decline, volumes coming in, more declining days, even more so the case here. And so this is evidence of the large interests being willing to distribute their shares. And once they're out and they no longer control the float, that's when bear markets can start, or really important downtrends. And I would describe this as a pretty important downtrend so far. And so I would definitely want to see the evidence of expanding bars, volume generally getting better. Volume doesn't have to be real high, but it's got to be improving with the bars as they go up and getting up to the area of this resistance along here at around 40,000. And then the ability to break through 40,000, be able to hold up there, and then any reaction that comes, the kind of a rule of thumb is the reaction should be no deeper than 1/3 to 1/2 of the prior up move. And actually, honestly, the less of a reaction, the better. And so you can see that over here, for instance. Look at this. Let me blow this up. Maybe we can see it better. Is over here. Notice this is a reaccumulation along here. And then look at how it jumps up, shows a sign of strength on a really good bullish bar above resistance in August, and then consolidates in that area. Look, there's no give back. There's very good demand, very good absorption of the shares. There's no attempt to come back in to the structure, which is very, very good. And then it just starts to just go up. And so these are the kinds of indications that we look for to really support the uptrend being strong, intact, and Bitcoin in strong hands.
That's interesting. What kind of time periods do you think this zone? So first of all, would this be a contrived zone that we're in now after that distribution top, whereas they're contemplating where the bottom could be or where the move could be, and they're either way, it's up or down? Or is this part of the overall plan and we're at a point where there's a already pre-planned move up or down?
Well, it's a very good question. I would contend that the CO, the composite operator types, would be in accumulating shares through here. I would tend to think in terms of probabilities about them doing that. It looks to me like there's an attempt to absorb shares in here to drive prices up. And so, but again, I would take this in very small bites on the way up. And I have a chart that shows this, if I can put my hands on it. And the idea here, yeah, maybe here, is this chart shows the idea of look at how you are putting a position on down here in the area. Now this is an LPS instead of a spring, but phase D is where we get busy accumulating our shares, because we don't need the lead time that the composite operator needs to build their entire position. So they might be buying hundreds of Bitcoin, or big numbers, where we are buying in much smaller quantities. And so our ability to be able to buy shares, they need this whole accumulation area to do their buying. We're able to just get busy and start to accumulate shares on the way up, because this is the beginning of the uptrend from the LPS. And so we think in terms of probabilities. There's a spring and a test that's occurred here. And so this is very constructive for a Wyckofian who wants to get long Bitcoin to be able to take a position, because you can keep your risks very narrow and your stops close in this area. And so you can put on a tranche here. You can put on a tranche here on this pullback. You can put on a tranche on this backup LPS. And then the last place that you would put in this uptrend initially anyway, until you get a reaccumulation, would be to take another position on this jump above this sign of strength right here. So there's 4 places here to initiate trades on the way up. Each one of them is at a higher valuation than the prior. So you're always averaging up a winning trade.
That's interesting. And, given our current situation, you always have to give bias to the trend, right? So we have to look for continuation down until proven otherwise to reverse the trend and continue up. And what's interesting to me is I feel like this is such a huge liquidity zone for the composite operator to accumulate for a move either way, depending on what the volume of the price action looks like, to provide direction of the most profitable move.
See, we're out somewhere up here. So this distribution has given us an opportunity to be able to sell long positions, get small, or completely get out on this distribution structure. And so we're really in a great position, because down here in the area where this potential accumulation is forming for some kind of a cyclic advance, let's say that's what's happening instead of redistribution, is that about, so let's say we have that, Well, we're already in a pretty good place here because we have been able to scale out of positions up here into the distribution area. And so this is what makes, I think, this distribution and accumulations, these schematics, so powerful for us. And also the way we're able to identify the counts downwards. So these counts were made at that time and showed the potential for lower prices. And so now that we're in that zone, we're in a position to be able to take positions and reinitiate positions at lower prices.
Yeah, and if there's enough interest at these prices, then the move upward can continue versus trying for a push down.
Right, exactly. Yeah, I'd be inclined I'm always in favor of the primary trend.
Hmm.
And so the primary, let's say the primary trend in Bitcoin is up. So my inclination would be to always be thinking in terms of the larger primary trend and the potential to have a rally of importance upward. Even if there's a bear market brewing here, there could be a heck of a rally that could go up into this resistance area right along here. And so that could be a heck of a rally up into the high 40s. And we would learn a lot up there by just observing price and volume about the potential for redistribution for another move down. And so there's a lot of things that could happen here where momentum could come in and cause prices to go up further, even if it's to a lower high and then leading to another leg down. So I've seen it all in my lifetime, and but all we're doing is we're just trading the probabilities, and we're looking for evidence of the CO and what they're doing. And I think we were able to see it up here in distribution, and it looks like we're seeing evidence of a somewhat of a bullish case here right now for. And also, you can see the area of this low right here represents support along where this count came in.
That seems to be the area that has not been broken yet. So even though the current trend is down, it stops there.
Yeah. So, but you have to have good risk management. Always really, really important. And when you get a big break like this, you are playing with fire. And so you just, especially with Bitcoin, because Bitcoin can be so volatile. And so we have to keep in mind the nature of the instrument.
It's
And
interesting. So with the institutional involvement now and more of the market makers, how do you think that's going to change that extreme volatility moving forward? Do you still feel like the potential's there now that the large retail investor is out?
I do believe that there will be less volatility. I mean, we can see right here in the way the price is acting that it's, from a Wyckofian perspective, it's pretty rational. The volatility still remains quite extreme. We're looking at this, we're seeing that high at 64,000 and went in short order down to below 30,000. So, that's, to me, still represents a degree of volatility which can lead to a risky situation. And so we do want to act in any possible way that we can to mitigate risk in our trading as we go through. Because the key, my experience in all my years, is survivorship bias. And the key to this business is survivorship bias. And so the ability to be able to come back to trade another day is one of the most important attributes of a good trader. And so you always want to be measuring your risk of ruin, so to speak, in any asset that you're trading in. And this becomes ever greater in the more volatile instruments, and it becomes ever greater in, say, commodity markets and things like that. And so this is something that I've, really learned, because the thing is that we don't see the track records on the people that didn't survive. And they just get sort of, erased from the historical view. And but you know, they're out there. So the only ones that we see the track records on are the ones that have found a way to keep going and continue to have success to one degree or another, even though we all go through the tough times. And so here in this case, I think Bitcoin is something that we just as all Bitcoin traders need to just keep that in mind as they're going through, is their ability to be able to manage the risks that still are inherent in this instrument.
Right, and this is largely directed at traders. So they're, you know, the long-term holders, the long-term investors. You know, they can just buy it, put it away, and, you know, carry it for the long term and not worry about it. But for the, I'm a swing trader. I'm more large move momentum trades is what I do. I'm not a daily or hourly trader, but a lot of people
Yeah,
watching are and do. And for me,
yeah.
it's, I trade with the big trends, leading the market up, leading the market down. I'm all cash right now, you know, just waiting for confirmation one way or the other.
I'd say that describes me really well too. And here we're looking at a chart that goes back to 2019, where Bitcoin was trading at 4,000 at the beginning of that chart and got up to 64,000. And
Right.
so that's pretty darn impressive, the kind of moves that you can have. So again, this goes back to the idea that we were looking at on the charts about seeing this big accumulation type structure, being able to identify that accumulation structure by when the accumulation is ready to become a big markup that can last a long time. And then you're in a position where you're able to weather the ebbs and flows of the trend as it goes up and up, and and this is the beauty of point and figure, because I did some great point and figure analysis of the accumulation area and those which I don't have up today, but those accumulation counts work beautifully. And then Alessio and I are going to do a workshop on how to use point and figure charting for crypto starting on July 8th. It's going to be a 2-session, 2.5-hour per session workshop that we're going to do at Wyckoff Analytics. And Alessio has done some great work on how to use horizontal point and figure counting intraday and daily, and be able to use that for identifying price objectives. And he's done some very innovative work. And so I'm really looking forward to those workshops that we're going to do together.
Yeah, that'll be awesome. I have Alessio lined up for July, I think, to do a little
Fantastic.
presentation with him. But yeah, so I'll put the link to the website, Wyckoff Associates or Wyckoff Analytics, in the notes below so that everybody can go to that and sign up for that webinar. I think that'll be fascinating. And I know a lot of people would like a deeper dive into, you know, the counts and things like that, into the deeper principles of the Wyckoff strategy and how these charts are working.
Oh, fantastic. And so I can come back at a later date and we can talk more, you know, just we can talk more about the principles of how to do horizontal point and figure counting and things like that. So we did, this is actually a little study that I did just for today. This is Shake Shack. This is an actual real-time case study that we did, and actually traded it. Here's the accumulation area here in the yellow shaded area, and it counted from around the mid to high 30s on this pullback up to 70 to 76. It went exactly to 70, and took profits there. And then here you can see that we did segments. So here's a larger segment, goes 100 to 107. It's exactly where it went to. And then we took the whole entire accumulation structure, went up to 123 to 130. And that's exactly where we went to. And then look at this reaction. So you can see how if you can really harness the idea of this, which is a very arcane old approach, this point and figure horizontal counting method, it goes back to the 17 and 1800s, that this method can really be helpful, but not many people know how to do it. And so we work really hard at teaching it. And then just last one I'll show you here. This is another one that I'm actually campaigning right now. And I bought it in the teens. I bought this stock. And this is relative strength. Relative strength is a very, very powerful tool that I like to use for the stock market. But here you can see this big accumulation area right here, and it counted, well, I'll show you the count. So this count went up to, this is in the wrong place right here, ignore that. But this 91 to 104, and it went right to 91, had a big reaction and has built a bigger count since then. It's built a reaccumulation count and is now up in the mid 130s. And so these are the kinds of things that you can manage with point and figure methodology, as you can identify. And so this would be the thing that, so to kind of make my point here, this is the kind of thing that you want to look for in, say, crypto, is to look for these big accumulation causes where you can buy at really good prices in the accumulation area, or just out of it, like right there, and then be able to participate in that big uptrend. And then you've got the wherewithal to be able to allow the profits to grow and be able to just stay with the trend because you have profits to work with. So that's one of the reasons why I think position trading like you're doing is so powerful, because, and how I think point and figure really helps with that. These are examples from the stock market, but I'm seeing point and figure working very well with crypto.
Well, it should, especially with where Bitcoin is right now. And I'm assuming, is that one of the models you're going to look at for the workshop? Or are you going to look at Bitcoin's price action and do a point and figure on that?
Yes, and then also we're looking at other crypto assets
Yeah.
and doing point and figure on those. And we're using some unique techniques where we're doing, instead of doing regular price scaling, we're doing percentage scaling, which is logarithmic, and requires, it's mechanically different in terms of how to calculate the count objectives. But once you get the hang of it, it's incredibly powerful.
Go back to Shake Shack
And
where
so
you
this
had
is,
that region highlighted.
sure.
And I think for everybody watching, wyckoffanalytics.net, make sure you go there. I'll put the link in the notes below and sign up for that, that workshop, because this range here looks a lot like what Bitcoin's doing right now. And if people can get in there and learn how to use this, this point and figure count, I think it'd be very helpful right now, because this looks a lot like Bitcoin right now.
Sure. And the only thing that Bitcoin's missing right now is it's attempting to turn up off a test, and it's trying to like rally up into that resistance area. And that I think is very constructive. And once you get that initial launch, this is this area here. And once you get, this is actually we call this a last point of support here, because it doesn't go to a new low. But look at the difference in the quality of this rally compared to the ones that preceded it, which were halting, truncated, didn't go to new highs. Look at each one of these highs is to a lower level all the way through here. And then, and sort of Bitcoin kind of looks like that today. And then all of a sudden there's this just magnificent launch off of an important test. This is what the attributes of phase C are, is that once phase C is complete, in short order, you start to get really good bars, good advancement of these bars, and push upward with good volume that propels prices up to above the resistance area. And that is confirmation that the uptrend phase C is in place, phase D is coming, and an uptrend is going to follow. And so, and that's the reason why we're willing to take and put a tranche on the test of a spring or the test of an LPS, and then put stops right underneath that level where the risks are manageable. And
So for people listening that don't know what a
what
tranche is, can you explain tranche?
Sure. So a tranche is just an old term for traders use for, let's say that you trade in threes. So a tranche, you'd have like three different positions that you would put on. Maybe they're equal dollar amounts, where tranche one is your initial position. Tranche two you would put on, say, on the first pullback in the phase D uptrend. And then the third tranche would be after the sign of strength, the jumping out and backing up. And those, when you put those three tranches together, you have a whole position. So you put them on in parts. And so there's different ways you can do tranches, but the idea is you're always averaging up into a full position size. And we'll tend to do it in thirds or in fifths, that kind of thing.
This is a fascinating chart. If you just add 3 zeros to the numbers to the right, you have Bitcoin.
Well, there you go. And so, very good point. And so the key is now look, let's say that your tranche one is on this test right here. Tranche two is on this pause right here. And then tranche three is here. Each one of these tranches raises your average cost, but you have an average position size that's about right in this area here, which we'll call 35. This is the average for the three tranches that you put on. Maybe you put a tranche on up here, but look at your average position is about the midpoint of the accumulation range. And then once you get that uptrend going, now you have a real campaign. You have a really meaningful campaign going.
And that explains what's happening right now. And what I've been saying lately is there's really no incentive to make a move anytime quick for the composite operator because it's such a huge liquidity zone, 30 to 40,000. That's just huge.
Well, and I actually have some examples, which, we'll do in the future. I think this is maybe it here, but this is an actual example of a hedge fund manager. This is from the New York Times, their deal book column. And you can see here, hedge fund manager reported cutting his stake almost by half to 4.5%, meaning he had 9% of the float at one point. And at an average price of $314, $315 a share, well above the $58 per share average price he paid last fall. Now this goes back, this is like 2013. So I put a line here. This is the average price that the CO, the hedge fund manager, very deftly bought these shares, 9% of the float in Netflix, right in here. And then this is the area where he sold half his position right there and on the way up. And so you can see this is what they're doing is they're wrapping up the float. So they're buying huge positions. This is not the only hedge fund manager that was doing this. And they wrapped up the float for the most part in Netflix. And once that uptrend started, it was, it was wicked. But here's the thing is that look at where they had to buy the stock. They had to buy the stock in the bottom of the range below the support area right here to be able to get that average price. This is what the CO does. The CO literally creates the accumulation area. They create it by putting bids under the support area, supporting the market. That is what makes an accumulation structure look the way it does. And they just keep doing that until they have absorbed their appropriate number of shares. And these big CO types, not all hedge fund managers are COs. But the very, very good ones are systematically accumulating shares in the accumulation area, and they have to compete with each other to get their adequate positions on. So here's one hedge fund that needed to buy 9% of Netflix to get the appropriate position size on in their portfolio.
That's pretty amazing. And for everybody watching, CO, composite operator, is the composite man that Wyckoff writes about in his principles of investing.
And that, thank you for that. And that is the logic behind what causes accumulation. It's also the logic of what causes distribution. So we always look for a cause. And that's the reason why we're looking at this area in Bitcoin and asking the question, is this a cause building for another move up? And you know, there's a lot of reasons here to be optimistic about that. And so again, it's just all about risk management and buying at the right place in the phase C, phase D uptrend.
Yeah, awesome. Well, Bruce, it was wonderful having you today. Phenomenal session. I know everybody is going to love this, and they're going to want you back soon. So I look forward to having you back again soon. And everybody go to wyckoffanalytics.net and sign up for that workshop and learn how to do this stuff, because we are right here with Bitcoin right now. And I think it'll be wonderfully helpful for everybody watching.
It'll be a great, it's a great laboratory for us. So
absolutely. And a very expensive one.
Yeah, right. Exactly. So, well, wonderful. And thank you so much to you and for all the viewers for taking the time to be with us today.
Yeah, absolutely. We have people from all around the world, and I know they're going to love this. So Bruce, thank you again.
Oh, and by the way, every Friday I have my program Power Charting on Stock Charts TV, 3:00 Eastern time. And then they put it on YouTube after that. The last episode was with Alessio, and he showcases a few of the things that we're going to be doing. So it's really a great session. So
yeah, and that YouTube channel, I'll put your YouTube channels in there as well, because I have that stock charts channel as well as the Wyckoff analytics channel. So I'll put those in the notes as well, so people can reference those as well. So
thank you so
again,
much.
Bruce, thank you. You have so much wisdom, so much knowledge, so much experience. Thank you for sharing with some of that with us today.
Well, we'll do it again.
Sounds good.
Okay. Take care.